Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some key mining stock situations at the moment. I would describe the current position in the sector as mayhem, given the divergent fortunes for many of the key plays. Starting off with the good stocks here, and we have African Barrick Gold, where there's been a rising trend channel in place on the daily chart since August. The floor of the channel looks like it's actually come in at yesterday's low. That's Monday's low, which was £2.85, just above the 20-day moving average and just below the 10-day moving average at 2.94. The end of day close well above £3 has to be taken as a very bullish flourish, and on that basis you would really say that well above the 10-day moving average we're heading for the top of last year's price channel at £3.50. So a relentless looking uptrend here, or recovery here, and one that has effectively been reaffirmed by the latest price action. Another solid situation comes in the form of Hochschild. Here we can see what looks to be actually a very strong reversal formation, sort of cup and handle style. This is the handle on the right here, and one would expect a break to the upside through the 215 zone, which is the neckline resistance of the formation, which has been in place since October, and then after that maybe up to 250, 260 towards the September gap, which is offering significant upside here in terms of even though we've already seen such strength in the stock. So Hochschild really looks like a stock to follow, and only at this stage back below the initial March intraday low of £1.92 would really delay the upside scenario. Starts to get a bit more dodgy as we progress through today's selection. I've got Anglo American here, where actually I was looking for another cup and handle reversal. This would have been the formation here from September through to the beginning of March, and we actually it appeared that we were going to break through the neckline at £16 to start this week. In fact, we've actually dipped rather violently to the downside, unfilled gap to start the week through the 200-day moving average, and really on that basis one would probably be looking back towards late January support towards £13 as the next step for the shares, especially as the RSI has now fallen well below neutral 50 to stand 43. At this stage only really back above the 10-day moving average at £14.99 would delay the intermediate breakdown scenario. Things get worse still, I suppose, with Petropavlovsk. Quite understandable given that this is a Russia-focused gold miner, and obviously we've had all the nightmare scenarios panning out there in Russia and Ukraine over recent days. So what we seem to have here is a bull trap through the 200-day moving average falling at 85, and the best one would probably expect now is consolidation in the 80 to 85 pence zone, just above the 50-day moving average at 79 pence, and then that might lead to the shares progressing back up towards the 95 pence to £1 zone. But really at the moment we have a chance of a break to the downside, and one would be on guard for a sub 80 dive, which would take the shares down quite violently given the bull trap through the 200-day moving average. To finish off, I got a situation which looks perhaps even more painful than the one at Petropavlovsk, and that's at Avocet Mining. Here we've also had a bull trap through the 200-day moving average. That's currently around the 12 pence mark. 3 failures at 14 pence. Really the shares should have broken up through that 14 pence level to start this month, but we'd had the opposite scenario here. Rather like Petropavlovsk, support or last chance saloon support is around the 50-day moving average, which is at 9.5 pence, and therefore there is a chance that aggressive traders might wish to go long towards the 50-day line in order to try and get exposure to another attempt on recent 14 pence resistance. That's it from me. See you again next time.